Hello, lots to look at this evening. Lots to look at this evening. Right, we're starting off with Bitcoin, and we're looking at Bitcoin with the Bollinger Band and the Fibonacci retracement from the fibs are on from this high point here in August, the 17th of August, down to the lows on the 8th of September, 9822. We're coming up here and we're getting resistance now at the 382 Fibonacci at 10837. We've had a couple of little attempts at that and we've not broken that barrier yet, the 0.382 Fibonacci. And we're bouncing off the Bollinger Band, the middle Bollinger Band now, having broken through it on the 24th. So that was encouraging that day, and we're holding that as support. So the target will be to get through that 382 Fibonacci and go on up to the Bollinger Band, the top Bollinger Band, which is in line with the Fib 0.5, the Fib 50, which is 11151. And if we look at the moving averages, I think that that's near one of the key moving averages. So we'll hide the Bollinger and we'll look at our moving averages now. We're currently on this 20 moving average, which is a key moving average, always is. We're hustling along that. We've been on it now for a few days. Once we got up to it, we couldn't quite break through it, and we've been skirting along that 20-day. We came down below the 100 and below the 236 there, but we're above that now, and we're battling the 382, like I say. And if we can get above and close above this 20 moving average, that'll be positive signs for Bitcoin. We'll have a look at it on a 1 hour chart. Again, I've got the fibs on from the high. So we're looking at the same Fibonacci really, and we're looking at that moving average, the EMA 50. It's important you get above that on the hourly chart. That's a 2-day moving average, and we've currently got above that there. This average will move quite quickly in line because it's a short moving average. So that's that there. If we were to have a zoom out a little bit, let's go back. Let's have a look at Ethereum next on the 1-day chart. Ethereum came down to the 100 moving average, sort of bounced off that and the 61.8. I'm looking at the lows from June in Ethereum because although you can look at March, I think these June lows are quite relevant because this is where the big rally started really. We started the rally here upwards. So if we look at those Fibonacci's, they correspond pretty well. We came down to the 61.8, we came back up to the 382. We couldn't get above and close above that, so we've come back down to the 618, and now we're just getting above the 50. And we've had 3 days there where very little movement. We've had 3 green candles, but as you can see, they're very small candles without much price movement. So it'll be interesting to see in Ethereum. Let's just get up an indicator in Ethereum that I'd like to have a look at. As you can see, the shaking money flow is positive at 21, and it's just come down a little bit, even though price is going up. That could be an indicator we could be in for a dip back down to the 61.8. I don't think the shaking money flow going down 8 points is going to make a huge difference. We're in positive territory. I've looked on a lot of these and we're not. Let's have a look at the next one. Let's have a look at Litecoin US dollar. And the Litecoin chart from the March lows, we've bounced off the Fibonacci there, and now we're at the 200 moving average. The 200 moving average is really a barometer of whether you're in a bull market or a bear market in any market. And Litecoin's had a tough time, and we're battling now that 200. If Litecoin gets above that, I can see Litecoin maybe beginning to go on a run. we've been below that 200 for a long time now, since March. Litecoin, we got above it there for a bit, and then we've dipped down below it. But yeah, I think that's a key moving average to get above for Litecoin. This rally topped out at $69 for Litecoin when Bitcoin was 12,400. And the big picture Litecoin, let's have a look on a longer chart. So Litecoin on a 3-day chart. We had a high in January here. A lot higher, whereas Bitcoin didn't have a high. Litecoin topped out 84 there. Where are we in relation to that? That'd be interesting to see. Below the 382. So Litecoin, we got into a channel there between the 236 and the 382 and never really got above it from the 6th of April through to the 23rd of July. That's a long time in that channel. Even got above the 618 eventually, but now it's come back down below the 382. Let's change the chart to Litecoin Bitcoin, because last time I looked at this was all-time lows for Litecoin. Let's have a look on the weekly chart first. Yeah, it's all-time lows. As you can see, it's very well. It dipped down here in we're in negative territory in Litecoin on the Chaikin money flow. Let's have a look at Chainlink US dollar first. Chainlink's low in March topped out at 2073 and dipped down below. Didn't quite get to the 200, but now we're battling the Fib 50 at 1104, around that mark there, and we're also on the 20 moving average, much like Bitcoin. And then we've got the 50 just after that. The Chainlink is also negative in Chaikin money flow. It's had a big correction here, not all the way down to the 718. If you look, the 786 rather. If you look at Chainlink Bitcoin, it's been below the 786 retracement. That's looking at lows from July. As you can see, we're fighting the Bollinger Band middle and the 618 at 102,000 Satoshis, 102,016 Satoshis. So this is a key moment for Chainlink Bitcoin. If Chainlink can get above these two and begin closing flags above, daily candles above this, we use the bottom Bollinger Band as really good support. Bounced off it, and now we're at this confluence of resistance. So interesting times in Chainlink Bitcoin. And Chainlink, if it gets going, it's known to just take off. Let's have a look at another Fibonacci from the low. So where was the low? It would be interesting to see. That's a different cycle. So May, there was a low in May in Chainlink Bitcoin. And there we're fighting the Fib 50, as you can see. We're fighting that Fib 50. Is that the same scenario as here? No, that's the 618. So from this one, Chainlink, as you can see, It battled along the 382 for a little while and then fell quite cleanly below the 618. Maybe it hit a moving average here. Let's have a look to see if it hit a moving average. Not really. Didn't really come down to that 200 moving average. We're now on support on the 100, in between the 100 and the Fib 50 from these lows in May in Chainlink Bitcoin. Big moments. And also the 20. We're battling the 20, which is the same as the 50. So these charts are very interesting at the moment. There's lots going on. Let's have a look at Band Bitcoin. Band's another interesting one for me. Because of the run that it went on from here, from the 4th of August to the 10th of August. Really was incredible. Band has come down to the 786 and really found great support there at the 786, 54,786 Satoshis. And now it's got above the 100 moving average and used that as support for 3 days. You know, is it about to come up more? Is it about to use this as support again and move up and challenge this 20 and 50 moving average and the 618? If it does all that, Band will be back on again. It'll be back on because it's used this 786 well. That's a positive bullish sign that it hasn't closed below at all. It's used it as very strong support there. And they're from the lows in July for Band. How about some more lows? Let's have a look back a bit further. See if we can get another Fibonacci on lows. I'm going to have a look at this. The March lows, no, because that's irrelevant, that cycle. Because we went up and we've come down. That June low, I'd say that low there is the low, the 27th, which is the same actually as in Bitcoin and ETH against the US dollar. This 27th of June was a low point where rallies began just after that. And it's always good to get a Fibonacci at the beginning of a rally upwards because that's the big movement. You know, rather than a low down here somewhere, which is lower, but this is a separate cycle. A lot of Fibonacci, it's where you put the low, where you start the retracement from. And I think it's important that you're not using other cycles because this was an up and down. So it was a failed little cycle there or a failed rally. And this fib here is irrelevant. You know, this is the one because this is the low before the rally began. So I think that was where I was anyway. So just to make sure. 27th of June, I said, didn't I? So that's there. Yeah, we're battling that 618 in Band from that low. The other one indicated we went right down to the 786. So it wasn't that low that I was using, but that's used the 100 really well. And now we're just having trouble at the 618. Right, let's have a look at, I'm in silver, so I've always got my eye on the silver chart. I've got the silver chart, the daily. We've zoomed out a little bit here because we've hit this 100 and used it as perfect support. That's a big hammer candle, a huge hammer candle, using that for support. It indicates there's a lot of selling pressure around that 100 moving average. Then we've tested the 236 the following day, and now we're in limbo. Really, we're in sort of limbo there. At the beginning of this trading week, we've just kicked off. Actually, we need to get above this 236 and close above it for silver to be back on. Right, let's have a look at the charts. Let's have a look at the stock market. The story here, the next 20 years in the stock market will be defined by technological innovation, and the most likely scenario is a 7% annual growth, DataTrek says. So it's all about innovation, they think. While press tends to look at the short term, the bigger and more important question facing all investors is what will they do over 20 years? Because in 20 years, that's more important to us than short term in the next year or so, because in the next 20 years, that's a lot of years to profit or lose. So we need to look at the big picture, really. DataTrek co-founder Nicholas Colas said in a note on Friday that the answer to the question will be determined by the pace of technological innovation, as that fuels productivity gains, which boost corporate profits, which drive stock prices. Over the next 2 decades, investors should expect annual returns of 7% for US stocks, with upside potential dependent upon the pace of technological innovation, according to his notes. While the day-to-day fluctuation of stock market lead investors and the media to ask what stocks will do in the short term, the bigger and more important questions investors should be laser focused on is what will stocks do in the next 20 years. And we have a look here. Nicholas Colas from DataTrek. He observed on Friday morning that long-term returns can have a sizable impact on how investors allocate capital, pointing to a surge in venture capital and private equity ownership among endowments and pensions after the S&P posted a negative total return from 2000 to 2009, which was called the lost decade. So going forward, what kind of return can investors expect to receive from the S&P? Well, he thinks 7%, based on technological innovation. How did he land on 7%? First, investors can safely eliminate the prospect of negative returns over the next 20 years because historical returns have never delivered a negative real return over a 20-year time plan. So even if they do go down in 5 years, over the next 5 years, if this coronavirus leads to a horrendous recession, where this stock market is viewed by a lot of people to be held up by quantitative easing, it's overvalued. Colas thinks that is a short-termist view, over 20 years, it will go up, if it may come down in 5 years, but if you're patient, you hold, and you're an investor that's willing to hold, then, that's a different story. And historically high average returns, 14%, have only happened 22% of the time, and happen during unusual periods when equity valuations start very low. For example, the Great Depression, the World War II, we were very low prices to begin with, and that's why we had annual returns of more than 14%. Investors can settle on a 0 to 14% range of average returns for the next 20 years, with a midpoint estimate of 7%. So he's come to that. Now, in crypto, you're looking at a lot more than that, but you're also looking at years where the losses, if you stay in the market and you have to adjust to volatility returns based on the market being up and down by so much. And it's a risky, very risky, aggressive tactic being involved in crypto. Much of the future returns in the stock market will be dependent on the pace of technological innovation. I've said that now a couple of times. So on the flip side, poor demographics going forward point to sub 7% returns. So with the US currently treading at sub 1% population growth, the demographic trends look even worse overseas. The main drivers of historical stock market returns have been interest rates, macroeconomics, geopolitics, and innovation. With interest rates near rock bottom, macro growth likely to be slow, and geopolitics a wild card. Investors will have to rely on tech innovation to